Hey everybody, what's going on? It is James here, and I wanted to shoot a video today. This video is going to be a training video. This is not going to be a market update. So if you're looking for, hey, what's Bitcoin going to do in 10 minutes? That's not this video. This is an evergreen video. What I share here will be good going forward for many, many years to come. All right. Before I jump into the content, I'm going to go ahead and start with the disclaimers up front, since very few people actually listen to the end of the video. I am not a financial advisor. All right. I am just some guy sitting in a spare bedroom. That means that you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Also, right now, stop what you're doing, click the thumbs up button, and make sure to subscribe to the channel if you haven't already to get more content like this. All right, so I'm going to talk about two things in this video if I have time. One thing for sure, and that's options. I thought a lot about this over the last few years because I started helping other people learn how to trade way back in late 2017. Now, what I told people in late 2017 was what I'm doing will only work in a bull market. I do not think it will work in a bear market. I was right. And so when 2018 happened and the bear market in crypto happened, like a lot of people out there, I lost a lot of money. And it was from hodling. It wasn't trading. I wasn't losing money trading. I was losing money from holding. But losing all that money actually ended up being, in a roundabout sort of way, a good thing because it made me focus on learning to trade properly, which I've now been doing for over, I guess, 4 years roughly. I started trading in May of 2017, but I didn't really start doing it right until the summer, a little after the summer of 2018. And one of the things that I've seen in throughout the last 4 years with other people, and it's the same mistake that I made when I first started out, was I was pretty good about picking the direction of a market, and I think most people are. You'll often see newer traders talk about winning 70-80% of their trades, and a lot of people, I used to do videos, and I remember one video I said, hey, I'm winning about 80% of the time, and this guy said, I'm a professional trader, you're full of shit. You might get other people to believe that. I know it's nonsense, it's not true. Well, he may have been a professional trader, I have no idea, but he was definitely dead wrong about winning 80% of the time. Anybody can win 80% of the time. It's not as fancy as it sounds, and it's not a good thing. That's the real irony of it. It's not a good thing because if you're winning 80% of the time, there's a very, very good chance that you're not using stop losses, okay? Or you're closing trades early, which back then I was doing both, right? More on the closing trades early than not using stop losses thing for me. Early, I wasn't using stops, which is bad, but I got away with it in 2017 because it was a bull market. But in 2018, around the time I shot that video, or maybe even early 2019, I was doing a really bad job of taking profits too soon. And that's why I was winning so much, because I was taking profits when trades started to go my way and I wasn't giving it a chance to stop me out. So what happens with a lot of people is they take profits too soon because they're afraid of losing. They're afraid it's going to turn against them and they're going to lose a bunch of money. Or they don't use stops because they think any minute it's going to turn back around. So I'm going to give you an example. Today we're going to look at a couple charts here. And we're going to talk about how we can fix this very, very simply, okay? I can't fix somebody's mental game in one video. But what I can do is give you a strategy to at least somewhat limit the losses when you are wrong if you're somebody that has a problem closing your trades, okay? So we're going to take a look at NEO. This is an actual trade I took on NEO. And I will tell you that what I'm doing right now is I'm in the middle of shooting videos, not this video, but other videos for a new course I'm doing on trading the spreads and options. Trading spreads is not what this video is about. But because I'm trading spreads, I've also been taking some smaller options trades on the side, just kind of tinkering with it a bit while I'm doing the option spreads because I don't have my regular day trading going on. So yesterday, while I was doing spreads, I saw an opportunity to take a short on NEO, but instead of taking the short, I bought a put instead, and I just bought one put, small trade, right? So this put, the way this works is this put was an April 22nd put. It was for $20 strike rate. What this means, okay, is it means that somebody was guaranteeing that they would give me $20 per share for 100 shares of NEO on or before April 22nd, okay? Now that cost me $73 to buy that put. That's what it cost me, right? I bought it when it was ranging up here. Now, I want you to think about this for a second. If I was day trading, I would not have been able to hold this trade and make a bunch of money, right? In this case, I made 170 bucks. Now, $97 profit. Okay, you might think to yourself, well, that's not a bunch of money. It's all relative, right? I risked 73 to make 97, so in some cases, people would say, well, that's not even 2 to 1. That's not good, but I had a real $73 risk, not a fake $73 risk where it's if I get stopped out, I lose 73 bucks. We're talking about this trade just went completely against me and I was never right. If I had shorted up here, let's just say hypothetically, and I didn't, but let's say hypothetically that I shorted right here and I thought it was going to turn around. When this went up, it would have stopped me out and I would have lost money. Okay? No coming back from that. The trade's done. It's over with. And if I shorted over here, I would have had to close it because there's the end of the day and I can't hold a short overnight because a naked short has unlimited risk. The market might gap up 10 or 20%. And if you think that can't happen, well, just look at Netflix. It gapped down almost 30% today. Netflix, a big, I don't know if you would call it a blue chip stock, but one of the biggest stocks there is, right? Gapped down 30%. So if you were long on that, you got completely screwed, okay? But what I could do was when I bought this put back here, I didn't really expect it to drop a whole bunch before the end of the day. I thought that it would drop the next day, which happened to be today. I thought this is probably going to range, and NIO has this really nasty habit of doing this to people. It has a really big move up. This was like an 8% move up from this low back here. And oftentimes it'll have a really big move up, it'll range, and then it'll take the move right back. So I bought this put, again, because it wasn't based on a setup. It wasn't like a real trade where I would take a short with a designated stop loss and a profit target and all that kind of stuff. I did keep it very, very small. I just did one contract, which gives me the power over 100 shares, and it cost me 73 bucks. Well, today when it dropped, guess what? That put skyrocketed in value. I think right now it's trading at 175 or 180 bucks. I closed it at 170. I walk out with $97 profit. Worst case scenario here is if this thing blew up and gapped up 50% overnight. I can't lose more than $73 on this play. That automatically limits my risk. Okay? Now, you can still close trades too early, so it doesn't fix that part, but it does automatically lower your risk. So if we think to an example of a trader who's winning 80% of the time, maybe they win 100 bucks on the right times 8 trades. We'll say they took 10 trades, right? Say they won 80%, they won 100 bucks each time, they made 800. Well, if they let their losers run, they might be losing $500 in the losers or more. And boom, they're a losing trader. They, lost 200 bucks after 10 trades. Whereas this trader, let's say they make 97 bucks when they're right, times 8 trades. Actually, let's just, for easy math, make this, let's make it $70 when they're right. Even less than they're risking. $70 times 8, $560 if I'm doing my math correctly. And let's say they lose $73 when they're wrong. You look at that, and that is what's 560 minus 146. I don't know off the top of my head. We're 460, 414, I think, right? 414 net. Only risking 73 bucks. That's what, like 6R? Almost 6R after 10 trades? Are you kidding me? That's a 0.6R edge. That's massive. Massive, massive, massive. Okay? I'm not saying you're going to win 80% of the time. Okay? I'm just using this as an example because this is the difference in options and regular trading. In regular trading, if this thing drops and you're down 500 bucks, or in this case if it went up and you're down 500 bucks, well, eventually you're going to have to close it because what you're thinking in the back of your head is this might continue to go against me. A really great example where an option would have saved me is back in 2019. And I use this example all the time because it was the last, I don't want to say it's the last mistake I'll ever make because it's certainly not, but it's the last major mistake that I hope I'll ever make. It's been the last one over the last 3 or 4 years where I just did something really, really stupid and got caught. And it was back there in October of 2019, right? If you've been watching the channel for a while, you've seen this example before. But basically what happened was for a few weeks, I was saying that I thought we needed to retest this level and that I would short Bitcoin when we got there. It was around 9,500 bucks or so. Down here, I put a post on social media saying, hey, if you're bearish, be patient. We're due for a bounce. Okay, so we start to get that bounce, and I lost my freaking mind. I don't know what happened. I just lost my freaking mind. And so I shorted Bitcoin around 8,000 bucks. I thought, I don't think it's gonna get to this level after all. I think it's gonna stop on the zone. And this is a weekly chart, so it's like, how would you short there? It's stupid. But on a smaller time frame, it kind of looked like it was gonna, stall out. So I started shorting it around 8,000. And then it went up to 8,500, and I added to it, and it went up more, and I added to it, and I added to it, and I added to it, and I added to it. When I got to this level, I added a bunch to it, and then it just kept going up. And the problem is I was still 90% sure that I was right, that Bitcoin was going to $4,000, but I couldn't tolerate the pain any longer. I was down close to $8,000. I think it was $7,800 if I remember right. And I finally said, I can't risk it, right? What if this continues going up? I don't want to lose $20,000 or $30,000. So I went ahead and closed the trade and took a $7,800 loss. And then, of course, what happened was it immediately turned around and dumped. How could a put have saved me? Because if I'd have bought puts through there would have been no anxiety about, well, what if it keeps going up? What if I lose 20,000 or 30,000 or 40,000, right? At most, I would have lost whatever I paid for the put. And in this case, I wouldn't have lost anything because it turned around and dumped, and I would have made out like a bandit, okay? That's where puts and calls, when you're looking for bullish plays, are so much more powerful than a regular trade. Because a regular trade, you've got to close the trade. You can't just let it run against you forever. And another example of this is, like I said, I think I talked about this earlier. I've shot this video 4 or 5 times. I kept getting interrupted, so I don't know what I've talked about, what I haven't. But essentially, if you look at Netflix, this is a perfect example, right? As somebody long Netflix yesterday on the close, they were long on Netflix from 351. So they took 100 share long, and when it opened today, they would have been down 10 grand on that long if they closed it as soon as it opened. Not even talking about if they wrote it down. Let's say they were still sitting in it, hoping it came back their way. That means right now, this person, if they take it out 100 shares, which is how much one contract is worth on options, they would be down 35%. So on 100 shares, they'd be down a little over 12,000 bucks. On the flip side, if a person had bought $350 calls yesterday, saying they thought it was going to go up before the end of the week, maybe they would have paid, we're just ballpark, 500 bucks for that call. Okay. Well, if it crashed, yeah, it sucks because they're probably going to lose this $500. It's probably not going to get back up there before the end of the week. So they're out 500 bucks, and that's no fun. But I don't know about you. I'd rather lose 500 versus 12,000, right? And the other difference is it's 12,000 right now. This might continue going down. We don't know where it's going to go. It might be 20,000, 30,000, 40,000 when it's all said and done, right? Whereas this person knows beyond a reason, any doubt, like the most I'm going to lose is 500 bucks. That's what I paid for the call. If it expires worthless, I lose 500 bucks. Even if it goes to zero, this person only loses 500 bucks. All right. That's the reason that I've started to shift some of my focus over to options. Not so much because it's better for me, although I do think that there's some unique opportunities in options that I'm going to take advantage of. But when I'm teaching other people to trade, this is what I see over and over again, is people win most of their trades, but when they lose so much that it just destroys their accounts, okay? It's the one fluke trade. It's the Netflix trade that drops 30%. It's the Bitcoin trade that, shoots up from $7,000 to $10,000 in 3 days. Or the Bitcoin trade that, drops from 60,000, to 50,000 in a couple of days where they were long. Or the Bitcoin trade that shoots up from, 10,000 where they're short to 20,000 in a couple of days. Whatever the case is, it's those events like that completely destroy people's accounts. And if you're trading options, that cannot happen, right? The most you can lose is the premiums. Now, you can still destroy your account if you take out too many premiums, right? If you buy too many contracts, if you have a $1,000 account and you buy 2 contracts at $500 risk each, well, yeah, you could lose your whole account. But what I'm saying is the risk is automatically limited by the option itself, okay? And this video is a lot longer than I meant for it to be, but I think options are a little bit confusing for a lot of people who have never traded them. So again, just to kind of go back to the NEO example, right? I would have lost money on a regular short instead I made money in the put. And that's really the bottom line. Same thing with that Bitcoin example I showed you. Right now, options are just now kind of coming into crypto. I think Deribit's had them for a while. I've never traded on Deribit. A few other sites have added them as well. I do think we're going to see more options in crypto, and that's going to open up the door for a lot of people to make a lot of money if they understand how to play options properly. One of the things about options that I didn't understand early on was that you can trade them just like shares of stock. So I wouldn't even want to buy this option like yesterday on Netflix. Even if I was bullish, I wouldn't have wanted to buy this option in the past because I'm like, well, it's a $500 premium. It's got to go up $5 per share just to break even. No, that's not true. Because if I buy that option for $500 and then it goes up in price, if the stock goes up, today that option might have been worth $600 and I could have just sold the option. Now that's bad risk management in that case. But what I'm saying is it doesn't actually have to go up that much. You can sell the option to somebody else before it expires. Or if you sold an option, you can buy it back before it expires for less than you sold it for. But anyway, this video is getting way, way longer than I intended it for, and so I'm not going to have time to go over to Bitcoin. I wanted to talk about some chart patterns on Bitcoin that apply to all markets, but the video would be too long, so I'm just going to go ahead and wrap it up there. We'll keep this one centered on options trading. I hope it serves as a really good introduction to options for those of you who have never traded them. I think it's a great thing, especially for somebody who struggles with the mental side of trading, struggles with closing, not so much with closing trades too soon, but if you struggle with actually taking your stops when your stops are hit, options may be a solution to your problem. All right, this is James with Crypto Common Sense, reminding you all to please trade safe. Don't forget to give the video a thumbs up. Don't forget to subscribe to the channel. And don't forget, you can check in the description for links where you can join my Patreon as well as my trading course. Just a heads up for everybody who's already a member of the trading course. If you're a paying member, a yearly subscriber, this new options course that I briefly mentioned in this video, you will get access to that as part of that course. It's not going to be an entirely separate course for current subscribers. So all that being said, I hope everything is going well for you all. I know the markets are bad right now, but the reality is for traders, our day-to-day life has not changed one bit. We're doing exactly what we've done every single day. And the bull market works exactly the same way in a bear market. All right, take care everyone, and I will talk to you in the next video.